but if anybody misses it, whoa, okay, so we're being recorded. I'll be really polite now. All right. So here's the plan. We did our check-ins. We're at 8:05. I'm gonna talk a little bit about the New York quarterly meeting so that you can understand kind of where I'm coming from and the journey that we're on. And then what I'm going to do is I'm going to share with you guys. This is not going to be unfortunately or fortunately, this is not going to be a passive evening. I'm going to share a framework for you guys to assess your risk at the meetings that you're representing. Um, and then unfortunately, I'm going to talk at you for a little while. And I'm sorry, but but Emily made me promise to talk about insurance and risk. And I want to share some of the things that we learned along the way. But when I'm talking, what you're going to be doing is kind of looking at this sheet, this rubric that I prepared, and you're going to be like, where am I at? Where am I at? So this is like an active activity, not just like passive sitting in a lecture hall. And then like we're going to have a moment to reflect on that and talk in small groups. We're going to do groups of about 5 people. We're going to come back together and share what we learned in that group. I have some fun tech set up to help us with that. And then we're going to wrap where we're going to think about next steps. Does that sound okay to friends? Can I get a thumbs up if that sounds okay? All right, I'm seeing some thumbs. That's great. So, okay, so now we're going to practice that thing about the chat right away. In the chat, I want everybody here in the meeting to type only 5 o'clock. You have 5 more hours to Quaker Midnight. That's great. But what I want you to do in the chat is like, what's your meeting or your organizational affiliation? And 1 or 2 feeling words, stressed, happy, sad, about how you feel about your meeting or your group's approach to risk. I want everybody to get typing in the chat, and I'm going to start calling some things out as I see them. Your meeting affiliation and how you feel about your meeting or group's approach to risk. Don't think too much, friends. Just type it in the chat. How do you feel about when you talk about risk and insurance? Buffalo Friends meeting, but how do you feel? Okay, Sackett.
And
Great work.
as folks are typing, I'm going to add that I think what we're looking for is the affiliation that's most relevant to your presence here tonight. So if it's your meeting, tell us your meeting. If it's a organization, tell us your organization.
Okay, great. So I'm loving the affiliations and loving these words. Probably, so Homeward Friends, not probably conserved enough, concerned enough, conservative, welcome Janice, keep them coming, like why you're here tonight and how you're feeling. I want to see those, inconsistent attitudes. Imagine that, maybe risky, friends. Comfortable. You maybe feel a little less comfortable after I'm done. Ouch. Poor Kurt. Church mutual is canceling. Not nice. But hopefully we'll have some ideas after this meeting. So keep those coming. Those are all really good. Plainfield Friends, lots of detail, worried, fear, uncertainty, and doubt. Hopefully we'll have a little fear, uncertainty, and doubt. I'm loving the curiosity that's coming here in the chat. So we're all over we've got great geographic distribution here, and we also have a range of emotions from comfort to worry and fear to curiosity. This is a good place to be, and we'll see how we do with those feelings over time. What I want to do is talk a little bit about, you guys should see a lovely pigeon and a checklist. You do, right? Great. I'm going to do that from time to time just to make sure that what I'm seeing is in fact what you're seeing. Because sometimes these things, they lag. Okay, so I'm going to talk a little bit about NYC Quakers and the New York quarterly meeting. Quakers have been supposedly, or so I'm told, one of the oldest continuous houses of worship in these United States is in Flushing Meeting. So, and these are some of our properties, what you're looking at here. I don't know how many of you, hands raised, if you've been at Brooklyn Meeting. That was on World Quaker Day. Last year, we had friends gather for a picture in our downtown Brooklyn Meeting House. That building was built in the 1860s. It's landmarked. We have 10 acres, and I think one of America's best Parks. That's in Prospect Park. It's open to the public every third Saturday in the warmer months. Come on by. Otherwise, it's hard to get in there. And then I've also got this, we do a lot of programming. And one of the examples of programming, I think I should have disclosed that I'm a member of Brooklyn Meeting, but we do this awesome community dinner on the last Sunday of the month where we do a tableside service meal to anybody who's in need. I'm calling these things out because like we do insurance so that we can do the things that we want to do. We do insurance so that we can worship. We do insurance so that we can gather. We do insurance so that we can feed other people and live our ministry. Like that's the why. And insurance is really all about reducing or pooling our risk. Um, and these are just some of the things, some of the activities that we're doing. I talked a little bit. So this is the quarterly meeting. We're not like other quarterly meetings. We're I don't know, a purple unicorn. We fancy ourselves a purple unicorn, like just in that we own a lot of real estate in New York City. And you might be sitting there thinking like, oh, these people are big, right? There's a lot of stuff there. But I'm here to tell you, like from an insurance company's perspective, we're small. Like we're not like because of the like they're like if and we're small enough that we have the same problems that you have, which is to say that we're not big enough to have somebody on our team who does nothing but think about risk. Now, when I worked at Consumer Reports, like we were big enough, right? Independent, not-for-profit organization, about 600 employees. We had a dedicated risk manager who did nothing but think about all the things that could go wrong. I'm glad that person wasn't me. Not to mention a team of attorneys. But here in New York City, there's a community of about 750 friends, members, and attenders. We have meeting houses in all these places. I talked about that. And we've got about, these are numbers that I had no idea what they meant, and I included acronyms, shame on me, but we've got about 70,000 square feet under management. My awesome facilities director, Steve Petrie, tells me that that's like, the way that they talk about it. And we're open one way or another about 350 days a year, right? Like we're always going at Brooklyn. We have a relationship with Friends Seminary in Manhattan. We're actually their landlords. These generate some pretty stable income streams. There's a reason that I'm paid a salary because we have like this massive footprint to take care of, as well as assets to insure and supporting that community. What I wanted to do is just talk briefly about some of the like slightly more non-traditional risk cases that we think about, and this is one of my favorite ones. We do one of the things that was happening at Brooklyn, and I'm so aware of my Brooklyn bias, is that we had uh, we've done a series of punk rock concerts where students would gather for their own version of worship upstairs, and then they would come down, have an art fair, and then 5 to 7 bands would play. And I do know that our trustees mandated no mosh pits to help manage the risk. But a problem came up with this when we were doing this, and I was new to the quarterly meeting. And one of the things that happened was that the insurance broker that we were working with was, let's just say, very fear driven and fear based as opposed to possibility based, and not really terribly helpful. They had the business for a long time, over 20 years. And when we would consult or ask them for help, they would kind of like refer us to the policy. I'm not going to name any, I'm not here to shame and name. I'm just there to say like, hey, we want to do cool things. We want to grow. We've got this really vibrant community. And I kind of feel like the person who was on the other end of the phone that I would call to talk about risk wasn't grooving on what we were doing, but there was a lot of finger waving, and that didn't make us feel good. And as it turns out, we didn't have to feel that way. And that's one of the things that I'm going to talk about. So that was one of the that's one of the more, the other thing, like we have a lot of, that's just one example. The other example I'll throw out is something that we were doing, and it breaks my heart a little bit that this is changing, is that we operated a homeless shelter out of the 15th Street Meeting House. It was a respite shelter for almost 40 years, but like at night, the gym in the shelter at the 15th Street Meeting House would become a pop-up place for 15 people to sleep, 2 volunteers every night, all volunteer run. And that's the kind of thing that insurance companies are like, wait, what are you doing in your space? It did give them a little pause. So we have a very non-traditional kind of set of activities. It's been difficult to get insurance. Fortunately, it's reasonably easy to shop for a broker. So kind of 40 minutes until breakout time. Thank you, Emily. It's a good reminder for all of us. The risk stewardship, like, so how are we doing? What I want to do now is, this is the question I want you guys, us, all of us together tonight. We are a community of learners and stewards and trustees upholding these testimonies. So this is kind of the overarching question: is how is our risk stewardship, our organization? We heard about how you were feeling, but now what I want to do is we're going to get to the part. I know you might be thinking he's lecturing or talking at us already, but it's going to get a little worse before it gets better. But the good news is you have some work to do besides just listen here. And what I want you to do is I'm gonna talk a little bit about insurance based on our experience and the research that we did. But what I want you to do is go to this link here. I'm gonna put it in the chat. It's also, I made it easy to type it in, and I'm gonna say this to meeting group chat. But you can go there, and what I want you to do is, just like I have shown here, is like make a copy of this document so that you have it on your own screen. And then what we're gonna do is you're gonna consider that while I'm talking. And I think what I want to do is I'm gonna show this on the screen. I'm gonna do a little, oh, I see a lot of random animals in there, which is great news, because that means if the random animals are in the document, that is you. I'm gonna
Ted,
share.
I'm going to break in again to say, I think most folks are going to be able to click on this link and get there, but if you can't, you will receive this document after this evening, so you'll see it eventually, but get there if you
Right.
can.
I'm gonna send, oh yeah, I should have said that at the top. I have a long document with all of the kind of the meaty content that is gonna get sent out to you. Like, so you're gonna get all of my talking points, this amazing recording, maybe a robot summary, but including this rubric. So what I want you to do is, this is a tool. And I said that part about this is a beta or an alpha, right? So I'm going to talk about these different coverages and stuff here. And what you can do is, you can think about or mark or as led, friends, right? We're a friendly congregation. Like, do we have it? Yes, no, are we sure? When did we last review it? How good do we feel about it? And then priority for action. This is probably like a 3-hour workshop crammed into an hour and 20 minutes. This is one of my many failings, but hey, we're nothing if not ambitious. We're here tonight. So hopefully many of you have that. So this is part one, and then we're going to get into part two about kind of finding a new broker. But our friends, like just a few thumbs if you've got the document. I'm seeing some thumbs. All right, way to go. All right. If you think I'm talking fast, am I talking too fast? I do that sometimes when I'm nervous. A little fast. I'll slow it. Yeah. Susan Russell. Susan has a hand up. You can
I
pop a question.
just slow down a little.
Slow down a little.
I can't think as fast as you're talking.
I can't, and I'm just, that's the nervousness. I'll try to, thank you. If you see me doing that, you do a little like, whoa, whoa. And I'll try to bring it back down. I'm just excited to be here with you. Okay, so you have the rubric, and I'm going to give you, so this is just a roadmap of what we're going to talk about. We're going to talk about, slide subtitle, we don't need to show that. But we're going to talk about, oh, I didn't share my screen again. Hang on, share, go. That's good, because I was editing the prezzo on the fly. Okay, so we're going to talk about insurance considerations. You guys are looking at your rubric as I'm doing this, and we're going to talk about the core insurance policies that I think it would be good for you to have. I did say I'm not a lawyer or an insurance professional, but I am somebody who's responsible for the organization and helps drive the adoption of these policies. So take what you like, leave what you don't, and get your own expert advice. this is me hedging on my insurance knowledge, which I've learned a lot about since I've come. We're going to talk about core insurance policy, managing insurance for rentals and space use, pitfalls, and industry trends. That's where we're going to go. And I'm going to be on this slide for a while. What I didn't do is try to summarize all the things that I'm about to talk to you about on the slides, because that's bad instructional design practice, which is one of my other previous endeavors. Okay, so key insurance considerations for Quaker meetings. So general liability insurance. So this is like, let's say something goes wrong. Somebody slips and somebody falls inside your building, outside your building, maybe on a subway grate. Maybe you're hosting an AA meeting and like there's an accident at that meeting. It also covers like damage to property. Like let's say that like there's that really great big tree outside your meeting house and it falls down. That's something that you absolutely need to have. And like the consensus is, and I reviewed this with some insurance professionals as well as my facilities director, about at least $1 million in coverage, right? For these sorts of things. These are, again, take what you like, leave what you don't. Then, as well as general liability insurance, we're going to want to have property insurance, which also covers damage to buildings, furniture. Imagine this happened at 15th Street. The basement floods, the Haviland Records room, all of a sudden the water comes up, the records are gone. What do you do? Hopefully you have insurance for that, any storms, any vandalism. And the idea is you want to have enough so that if you had to replace whatever was damaged, you could do that, right? And in order to do that, you're going to have to know what it would cost to replace things and have estimates for that. Show of hands, how many people here are trustees or fiduciaries in their organizations? Okay, I'm definitely seeing hands go up for this. So you could be, this is the scary, like I'm not here to scare you, but this scared me. Like, like kind of trustees can be named in lawsuits, which is why it's really important to have directors and officers insurance that protects you guys, members of the meeting, their committees, trustees, from liabilities if you make like a governance decision that people allege that there's harm. So it's really important to have that policy in place. If you have employees, like you need to have workman's comp. That means that if somebody gets hurt on the job, they're going to be covered. A lot of meetings, raise your hand if your meeting does stuff with kids or like other people. Yeah. So you probably want to have sexual conduct and abuse coverage, like that way if there's allegations or past events. This is a real thing, right? Like our faith-based congregation is not immune to these kinds of things or these harms, and it's good to carry coverage for those. Cyber liability, hardly a day goes by when I don't get some kind of like valuable fraud requests, like or desire, and the number of vectors are increasing. And I'm not going to be super political, though I bet I could in this conversation, but we are living at a moment when some consumer protections, like the Consumer Finance Protection Board, is like not able to do maybe as much as it was before. So having like, kind of the right sort of cyber protection in place, especially if you're accepting online donations or other things, you're going to want to have those policies to protect all your digital stuff and potentially restore it. And as if all that weren't enough, like there's something called umbrella coverage, and that's coverage on top of coverage. Like just to say, like, let's say that something horrible happens at your meeting, and I hope it never does. And they want to, like, the insurance policy goes up to say you have that general liability coverage for $1 million, but somebody's claiming another $1 million in damage against you. What the umbrella policy does is make sure that you have that extra bit of protection in case you were to have a large claim. And I'm going to say that when I first got into this job, I was kind of like, I can't, but like, really? Like, can't we just do stuff? Do we have to worry about this? The answer is yes, we can do stuff. And yes, we have to worry about this because as trustees, as fiduciaries, we have to think about the long-term viability of the organizations that have been entrusted to our care. And then the last thing I'm going to say about these is that you probably want to review these policies in a lightweight way at least once a year. And then every 3 years, you probably want to take a closer look. So that's kind of the overview on the core insurance policies. I'm curious to hear about how you're doing on your scorecards. I'm going to transition to insurance for rentals and facility use. A lot of meeting houses, like you have this space and the space that's idle, and this could be a source of revenue, right? Hey, can I get married in your meeting house? Or hey, I'd like to throw a party. Yes, but no booze, right? That's one of our rules. You can throw a party, no weapons, no violence, no booze. We're friendly, but we mean it. But we have to reduce our liability when we do that. And the best way to do that is to, and these are words I never uttered before I took this job, but you need a certificate of insurance from the people that are renting your building. Or if they have insurance, you ask them to make you an additional insured. And like this is like one of those things that does insert some friction in the process, but it's really essential to mitigating risk. So, and the way that like we do a fair, because we have a lot of space, we do a lot of these, there are places that will sell you insurance for events. And we encourage people to look those up online and to find them and, but that's a requirement before people rent from us. Another key thing about this one is making sure that you have a facilities use agreement where the people who are renting the space from you agree to indemnify you. That means if something bad happens, it's their fault, not your fault. That doesn't mean that folks might not still come after you, but you want to make sure that you have that agreement in place. There are a lot of groups out there that do good work, like AA meetings in particular, that can be hard for them to get that kind of insurance. The idea is the more you get certificates insurance and the more you get indemnification and have good agreements in place, the less your risk is. And then as a meeting, you can discern if you want to make exceptions. I'm not saying that you should make exceptions, but I am saying that that's like an approach. But there are parent organizations like intergroups for AA that can provide them, or you could consider if a group has a long-standing relationship, adding that to your policy. So that's an overview on insurance for rentals and facility use. I'm wondering how you guys shaped up on your rubrics. The next thing I want to talk about a little bit is our pitfalls. Pitfalls. There are pitfalls in things, mistakes that we make as friends, right? So first of all, one of the bigger mistakes that we make is that we don't have enough insurance, that we undervalue what we have. And that means that if disaster strikes, like climate catastrophe, like we don't like, any kinds of things, right? Like some sort of an event that we just weren't anticipating, that meeting houses, this happened after the hurricanes down in South Carolina, and we saw this with the wildfires out in California, like meeting houses, like where they didn't have enough insurance to cover replacement value. So you want to make sure that you have enough, and to do that, periodically you get appraisals. And we just did, that's one of the things that we just did last year. We reappraised all of our things and then all of our properties, and then updated our insurance coverages accordingly. You want to make sure that you have enough liability coverage. And this is really important, that you have risk mitigation practices. And like to break that down, like in other words, if you want to have a community safety policy, right? You want to have a child safety policy. You want to have a sexual harassment policy. We hope that things always go right, but we want to know what happens when things go wrong. And we also want to take steps to protect everyone in our community. This is an active concern. This is something that we're far from perfect at right now in the New York quarter, but we're working hard to get better at. I'm bringing, like, with my not quarterly meeting hat on, but with my Brooklyn meeting hat on, we're bringing our community safety policy back to business meeting for a third time. Hopefully third time's a charm, to get the meeting to adopt that community safety policy. And then another common pitfall is that, like, a broker might not be familiar with not-for-profits or religious organizations. So the person that you're working with, like, your broker is your expert, right? When we're buying insurance, like, I am not an insurance expert, but your insurance broker should be. And it's better if they're an expert in faith-based organizations, and that they know what you need, and they know the space, right? And there are orgs out there that are good at working with schools, nonprofit, churches, et cetera, et cetera. Because the wrong broker is not going to be able to protect you in another way. The other thing is, I just want to really emphasize that having, like, the right relationship with the broker, where your broker becomes your outsourced risk officer, right? They're the person, like, hey, I don't know, we're thinking about doing this new community wellness program. True story. We're thinking about doing this new community wellness program. We want to we want to we're going to hire an outside agency to provide social work support to people in our community. What's that look like for us? Like, now we have somebody that we can call that's going to say, here's what you need to do. Make sure that in the contract that they've indemnified you. Like, we get that kind of guidance, and we have a thought partner who's going to do tabletop exercises with us, as opposed to, oh, hey, like, yeah, you shouldn't do that, right? Or you're taking out a lot of risk there. Do you think that's a good idea, Ted? Like, yeah, we do think it's a good idea. Our committee, like, our community's been discerning on this for years. Okay, so now I'm going to tell you guys about some industry trends. Insurance costs are going up. Anywhere from 20 to 40% is what, like, we learned from our research. It's getting harder to get underwriting for sexual abuse and misconduct. Cybersecurity concerns. We know that, given that meetings are using platforms, like, all of our finance stuff is digital now. Communication, like, you want to have cyber liability coverage, as more and more things are digital, there's more and more vulnerability there. And then, of course, we've already alluded to the climate and disaster risk. So those are some of the big industry trends. So some things for us as friends to think about: that you would reassess your property value on a regular cadence, maybe every 3 to 5 years. Make sure that you get those certificates of insurance. Think about your liability limits, and if you have the bandwidth to or financial resources to increase them. And then make this part of your regular practice at trustees meetings or business meetings. Like, talk about risk and engage about, like, but don't just think that it can't happen. It's better to be prepared. So those are insurance considerations. I hope that you've updated your scorecards. At my clock, it is about 8:40. I'm wondering how I'm doing on time. Emily, how are we doing on time?
Well, you had said that you wanted to make sure we were moving into breakouts by the top of the hour. Um, how are folks doing with processing? Are you okay? Yeah, I'm seeing mostly nods that we're doing okay with
John is
processing.
not doing okay there. John's shaking his head no. Not okay. John, put something in the chat. Help me out here. Okay, so I see that we have 3 new chat messages. I'm going to check in on those. Okay, I'm sorry. Sorry, Darlene. Thank you for pointing that out. I will do better than you guys. And my apologies. The John is a little overwhelmed. We'll work on the overwhelm. So the next thing I want to talk about is finding a better broker, right? So the broker is the person between you and the insurance company. And generally, you want um, to have, like, it's really, insurance policies are difficult to understand, and complicated. So you need an insurance broker who can do the shopping for you. This is not the kind of thing that I think you should shop for yourself. You want somebody who is better at it than you. I'm going to go through some steps for how you might do this. So the first thing, these are 10 steps. You're going to get all of this in a document. I'm going to talk through them now before we go off into our small breakout sessions. The idea is you're going to form a working group. Who goes in that working group? You're going to have executive, like any executive leadership. This could be a volunteer committee, somebody who thinks about operations, somebody who thinks about facilities, somebody who thinks about finance, are going to be your key players in that, that are going to help you discern on the insurance question. So once you have that group together, what you're going to want to do is think about like, why are you doing this now? Like, what's prompting your consideration for changing, right? Like, were you not getting like the service that you wanted? Was it just time to try something new? Did you feel that the risk practices weren't going well? And you want to think about like, it's a little bit like you're going to be in this relationship with a while. You want to have somebody that you work well with, right? Price might not be the main consideration. Generally, brokers, you don't pay insurance brokers. Insurance company pay brokers. It's built into their fees. So there's not out of pocket expenses. It's their job to go out and go to market and find the best deal, um, for you. As you like, as you're shopping around and thinking about that, it's an important consideration. So as you're doing your research, like from my perspective, from our perspective at the quarterly meeting, what we were looking for, and we did just go through this massive process where we, I think, started with about 8 firms and whittled it down to about 4, like then down to 3, and then ultimately picked one to go with. But the criterion that we had were that we wanted them to have experience with nonprofits, particularly faith-based organizations, that they understood historic properties, that they were going to do great customer service. We didn't want to feel like just a number, that we were dealing with some kind of big bureaucracy, and that they would have like, proactive risk management. And what that means is it's not just going to be us calling them when we have a new program, but they're going to be coming out and visiting us. So once you have those elements together, like, and I will have a couple in the document that the good folks at the Quaker Leadership Center are going to circulate. I included 2 from our list that you can consider that meet these criterions. I want to, having worked at Consumer Reports, I'll just say that this is not neither of these are in, this is not an implied endorsement. Shop around, find other people, make the list better. But these are 2 that I have recommended to other folks that when we did our due diligence, we were happy with it. Things change, people change. And that's why it's important to update these. But you're gonna like put together like a little bit of an RFP, just a few pages, outlining like what you need, like what you're looking for insurance for, what coverage you might have. Once you start to engage with these brokers, they're going to start asking you questions. They're going to be like, we need to see your book. Like, we need to know if you've had any claims, like, and they'll help with like the next round of details. If you have any particular needs and concerns, like you're throwing punk rock concerts or homeless shelter, you know what I mean, any of those things, new programs, mention those things. The more that they know, the better service you're going to get, and the better, like, you'll get a more authentic assessment. What's an RFP? Thank you, Darlene. An RFP is a request for proposals, and I will update that in the next version of this Prezzo. And it doesn't need to be just a couple pages. What do we want? What do we need? Well, who are we about? What are we about? That's really what it is. Like, what are you shopping for? It's something to at least start a conversation with potential brokers, but it's designed to help them understand if they can serve your needs and have a better set of responses. I suggest that you narrow it down to about 3 or 4 candidates, like from like a wider list, like, and then you're going to want to think like, do they have experience with organizations like ours? What's their team structure like? You could think of the 3 bears, like, are they too big? Are they too little, too hard, too soft, like or is it just right? Just right. We're looking for just right. Um, in the story, you can try out like specific scenarios that are relevant to your properties. And, hopefully on some level they vibe with who we are as friends. That you feel like some kind of a connection, like as part of your process. It's worth having like some specific evaluation criteria so that like if you're assessing a bunch of them, like to be able to say like, ask them like, what's your client retention rate? Like, how well do they score on experience with similar organizations? What's their claims handling process like? What's their approach to risk management? What's your like like get references, check references? How were their references? And then assessing that cultural fit. Obviously, you as friends will all discern this in a friendly fashion. We'll review the findings. We'll figure out who's going to be the best partner. We'll probably share that decision with a business meeting or with trustees or whatever is appropriate. And then it's useful to write up like, why did we do this when we did this? Like, why did we pick this group so that at some point when somebody else is on trustees, they'll know like, hey, why did we make this pick? And then once you do all that, we're already at step 9. It's time for transition here, and also transition to the breakout groups in just a couple minutes. But you would notify your current broker. If you're not sticking with them, you'd get like, you call these, like you would let your insurance companies know or new companies know that they're brokers of record. You transition any policies and then introduce your new broker to the community, maybe invite them to a trustees meeting. They work for you. They can come and make an appearance, and they know a lot more about insurance than me. That's their job. And then you're going to want to set expectations on the like ongoing relationship, like maintaining regular and clear communication, like maybe educating them a little bit on Quaker processes, et cetera, et cetera. So this ends the lecture component. Not my favorite mode, you might not of disseminating information, but like hopefully the format with the rubric was okay. You'll let me know. But what we're going to do now is we're going to go into small breakout sections, and I have a document set up to help scaffold this experience. The questions are here on the slide. I'm putting a document in the chat, and unlike the other document I shared that you needed to make a copy of, in this document, you can write in the document. And I have the questions that are here in the Google document that I shared in the chat. So we're going to go into, we're about 20 participants. So I think we can do 4, 5. What do you think, Emily?
Ted, we're about set. I think we're going to go into 3 groups because I have experience and I know that a few folks will duck out as we're moving.
I trust you. I totally trust you. So we're going to do 3 breakout groups, as Emily says, and we're going to work on these questions. So we're going to be, if you're in breakout group 1, 2, or 3, you'll have rather than trying to answer all the questions over the next however many minutes I allocated for this. I think we said 8:45 to 9 o'clock. We're at about 8:47. So we'll do this until about 9 o'clock. I think we should does that sound right, Emily? Keep me honest.
I think we had said more like 10 after the hour. So we'll bring
so we
folks
have,
back around 10 after the hour.
okay, so we'll come back. We'll bring folks back around 10 after the hour. That sounds good. And each group is going to be assigned a question. So in breakout room 1, you're doing question 1. In breakout room 2, you're doing question 2. I'm updating these on the fly. And then in breakout room 3, you're doing question 3. All groups are welcome to tackle question 4. This is me as an educator providing like some kind of direction. If you're feeling ambitious and you want to answer all the questions in your group, because that's the kind of group that you are, bring it, friends. Don't be shy. Answer. But I also wanted to, like, if you just want to chew on the one question, I think that's fine. I will put the questions up again, and the questions are also in the Google Doc. I am going to float from breakout room to breakout room. And yeah, that sounds good. So if you're in the breakouts, feel free to chat me. I will go from room to room, work on your questions. We're going to teleport you back at about 9:10.
We'll see everybody soon. And just in case you get lost, Agnes's group is group 1, Katrina's group is group 2, and Lisa and Martin's group is group 3. So when you get there, you'll know where you are. See you all in a little bit.
Thank you, Emily. Thanks, everyone.
Right.
We didn't want to leave till we had to.
Okay, friends, welcome back. I had the chance to eavesdrop on every group conversation, and there's a lot of there's so much knowledge in our community, and I'm really forward from learning from you all and you sharing with one another a bit about the discussion that we had. In the interest of time, I think I'm going to be fairly prescriptive, which is to say I'm going to call in the groups in reverse order and maybe start with group 3 and question 3. Group 3's question was, what gets in the way of addressing risk in your meeting or community? Or just group 3, what was your key takeaway that you want to share with us? Who from group 3 is feeling brave as a designated spokesperson or wants to read what they've got in the Google Doc? Or that was a flop. We didn't update the doc. That's okay.
We can certainly say that the cost of insurance is increasing, and insurers are dropping out essentially. So dropping your coverage is a big issue. The risk of natural disaster is just increasing, and so we're all facing greater problems. Smaller meetings are affected to a much greater extent because it's very costly for a small group to be covered. A larger organization like Philadelphia Yearly Meeting that has a broad panel of coverages available does make that simpler.
And I was taken by the fact that the at the time you bought the policy is where the value goes to. That doesn't increase over time. So if you bought a policy and your building was a certain level and then it increased in assessed value, that assessed value will probably not be covered, or that assessed increase.
And I'll say that's why it's important to work with your broker to make sure that those coverages like periodically are updated so that any of the insurance payouts would reflect the real value. The trade-off with that is that your policy premiums, the cost could increase. But that's a trade-off that you'd have to consider. Just name your break, do me a favor, your name and your breakout, or just your breakout group and what you talked about. Let's hear from a couple more.
Ted, are you going by question or by breakout group or just anybody?
I think we started with group 3. I think ideally we go next to group 2 and then group 1, but I'm not sure which group Darlene represented. So, Kurt,
So I was in 3, Darlene was in 3. And um, they summed it up pretty good there. We had a wide range of meetings, sizes and assets. And I've mentioned to them, we don't even own our building. It's a home of John Wilbur originally, and the bank holds it to make sure that the Gurneyite and Hicksites couldn't come and take it. So that complicates things, but we're in charge of the maintenance of it. And again, our insurance is about a third of our total budget, and maybe going up.
wow. Let's hear from group. Thank you, Kurt. Let's hear from group 2.
This is Susan from Group 2. We talked about a variety of things, one of which is that for some of the trustees, some folks who have been on trustees, some of this is pretty new. And then the fact that there's so much detail, and for many smaller meetings, managing the detail and figuring out who's going to be responsible and then getting that into the system, if you will, whatever the routine you have is pretty challenging if there are not folks there. And it's even more challenging if you don't have anybody in your meeting who has any expertise. I'll leave it there.
That sounds really valuable. Any others from group 2? If not, we'll go to group 1.
Okay, our topic was what worries about risk. And so some of the worries are finding the right broker. Somebody had trouble filling in the document for this class. Lots of questions about coverage in specific situations. Sometimes members of a meeting have a relationship with the broker and then have to relay that information to the rest of the meeting, and friends may have trouble understanding. One meeting had a new insurance company and raised the rate by 40%. Somebody said expected rate increases have been about 15% per year, but all bets are off now. We were wondering what's the difference between a broker and an agent? Are they the same thing? We talked about some external risks that raise costs. For example, at Powell House, the insurance was canceled in January or February because the insurance company had been there for a while said that it was a volunteer fire department. It's a very rural area. There are no fire hydrants. There is a standpipe and a pond that was built for that purpose, but the insurance company canceled considering the risk was too high. So we've had to find another insurance company. Someone said that finding an insurer that specializes in churches is a real plus. And then we were talking about, well, when you have an event and you have an open house where you bring in the food that members made, that's okay. But if you buy food and bring it in, it's not, which seemed perplexing. And that's all I have. Is there anybody else wants to add to that?
No, that's fine. Oh,
Thank you, Beatrice. I want to address that question about the difference between like the insurance agent and the insurance broker. It is an important distinction. My understanding is that insurance agents typically represent a particular carrier, right? Like Philadelphia or Mass Mutual, et cetera, et cetera. So they're only able to offer you things from that particular company. An insurance broker represents you, the client, and can get policies from a range of insurance companies and generally has relationships with insurance companies and can find the best like packages of insurances. So it is different. And the process that I took you guys through tonight is about selecting an insurance broker so that you're not out doing the shopping or doing the work of the broker trying to compare policies to policies or insurance companies to insurance companies. The idea is that the broker has that knowledge for you. So I have one final question for the group, but any other learnings or observations we want to share before we go to that and maybe wrap with some closing worship? Katrina.
This isn't an observation, but it's just a question. Do you ever find among like small meetings or nonprofits anybody who's overinsured? Is that even possible?
I do think it's possible to buy, like you can buy too, like, I think you can buy too much of anything. You can be overinsured. I mean, in some ways it's about figuring out like what your like kind of like what your risk tolerance is. But I think it is possible to have to pay for too much. And it's something you would want to avoid. Like and a good broker is going to help right size the policy for you and make that determination. They're going to know what the ranges are, what your claims history is, like what the potential liability is. Because, I mean, these are products, and to a certain extent, like companies are incentivized to sell you more than what you might need. This is true for us as homeowners or renters or whatever. Like you can always buy more. The trick is, kind of having it just right. But I do think it's possible. And ask your ask a broker.
Thank you.
It might be worth noting that people seem to be satisfied with a couple of companies that were mentioned in our talk. One is Guide One, and the other was Mennonite Insurance. So that might be worth noting.
Thank you for that, Lisa. The so with that, Emily, should I pop that last question up? Am I sure? I'm not, I took the screen share off so we could see each other. I guess just the last question, like, one thing, I'll invite you guys to reflect and maybe we can go out and worship on this as opposed to doing, if you feel led, friends, put it in the chat. But like one thing that you're going to do next, in light of what we learned here today, I will put this question in the chat and invite you guys to answer it. There's my chat. And then, from like, this is my contact information. Like, I'm open to, like, if you have questions that come later or ideas or feedback, collaborations, you're coming by the 15th Street or Brooklyn Meeting House, but drop me a line. This will be included. I wasn't planning on sending the deck around because this is just really scaffolding for the conversation, but I leave you with this quote from, I don't know, somehow this quote from Elizabeth Fry spoke to me. Oh Lord, may I be directed to do what to do and what to leave undone.
Mm.
Seemed apt. But thank you, friends, for your time and attention and dedication, most valuable commodities that we have.
Ed, thank you. And as responses are coming into the chat, don't stop. Keep putting them in the chat. I'm going to add now my gratitude for the evening and also let you know that the next time this series is gathering is on Thursday, April 17, same time. The conversation we'll be having will be on the tension that can sometimes exist between the traditional definition of fiduciary responsibility and our responsiveness to the movements of the Holy Spirit. And how do we work in an environment where we're holding these things together? Our facilitator for that conversation will be Noah Merrill from New England Yearly Meeting. I'm seeing one response so far. Ask the trustees from both buildings to attend the annual review, not leave it to the clerical leadership and finance. Wondering if anybody else has one thing you might do next. We've got a couple minutes, so I'll transgress and say if you want to say something out loud, you're welcome to for a couple minutes. Kurt's going to follow up on building coverage and come up with a plan for review. Darlene is going to look up the insurance policy, see what it actually covers. Excellent first step. Reviewing the policy, that's going to be a common theme. Thank you again, and I will remind you, as always, before I turn the time over to Della, John Ridgway is going to scare some people. Okay.
Glad I could help.
Yes. I'll remind you, as always, to make friends with each other. If you met somebody tonight that you want to talk to more, exchange contact information. We encourage you to continue having these conversations together between our sessions so that not everybody is having to do it on their own. Della, do you have announcements to make about Quaker Leadership Center?
Yes, I do. So we are well into our winter/spring programming. We're doing some sessions on celebration of discipline. Even if you didn't get in at the very beginning, you're welcome to join us. We're doing a monthly study on that. There's 3 different times that can happen. All you need to do is email me, and I will put my email in the chat, and say, I'm interested, tell me more. So we are having our annual conference this year in conjunction with Pendle Hill. That will be May 2nd to 5th at Pendle Hill. I would love to have you join us. And yesterday I was in planning session with, I call them the 3 Steves, who happen to be 3 treasurers who are all named Steve, who have personally been helpful to me in understanding finances and budgeting and treasurer kinds of things. And we're working on finding a time in June when we will put together a basic video, which we will make available to friends, and then we will have the opportunity that we will have out there for friends to view, and then we will schedule some Zoom times for folks to come and ask questions of the Steves. So there are other things that will be coming up. We'll be having some author talks coming up. Again, these resources, these recordings are available on our YouTube channel. We also always send these out to the presentation, the link to the recording, and other things to everybody who's signed up. So that means if you did miss a session, you can view it. If you need to go back and review because there was so much information, it's there for you. And please share these with other friends that you know that these will be helpful to. It's important to us that we're good stewards, and I'm really pleased that you've taken time tonight, and I understand that these are important conversations. So it is 9:27. Are there questions that you have about